Hello and welcome to the Wednesday check-in here on Landy's Crypto Corner. Today is February 5th, 2025, and of course we're looking at Bitcoin as always, following up with where we left off on Monday in the Macro Monday video. And, since that Monday buyback, Bitcoin did meet the criteria for coming back and testing the downside here around the closing lows and below to the exact area that we spoke of, right around that $96,000. Now, of course, we are seeing some common support in that area right there below the lower second standard deviation of the Bollinger Bands. And this is a downtrend, and it's at this moment, because we have the lower low, on the close, it was slightly higher low on a close, but lower low swing, the lower high, and then the lower low closes down here. We have, a downtrend, obviously. It is not full trend just yet. And in this case, we'd still have to be aware of what would lead to a trend break back to the upside from here. Just so that we have that data plotted on our chart here. And it's still going to be this high up here at 106,500 or so. And, if we start seeing Bitcoin trade back above the close open and common rejected area where we put in the higher low here at 104, 830, almost $105,000. That's kind of the zone of interest back to the upside, the primary overhead resistance outside of some of the more local resistances if Bitcoin does try to push back up. That being said, if Bitcoin loses this common area of support where we are getting a lot of bidding going on the past few days, it's looking to actually get expansion into the lows there, as we've talked about prior. Let's go ahead and what's going on with this? This doesn't seem like I don't know, maybe my eyes are just messed up today. All right, so let's talk about a few things here. Let's go ahead and turn on the support and resistance chart. We know about the $96,000 level. We talked about this well before this move down as a possibility. And of course, we had one of our other zones hit that we had been talking about in terms of the bottom side areas of interest. And for those that are new here, we're just kind of using the stoplight, stoplight signage kind of zones here. So we have the red zone, the yellow, and the green zone. Below the red zone, danger, we're going to run kind of the last line of support. This isn't even a higher term time frame area that's relevant. It's only a daily area that's relevant at $85,000. And that is, kind of the line in the sand between there and the closes around that upper $80,000 region. If we see the bottom side of this zone dropped, what is the bottom side of the zone? $92,000 to around $88,700. We saw the $300 front run. That is this higher low over here. That is also the 1.168, not 618, 168 or 16.8% above the prior cycle all-time high. If you were to run a fib from the $69,000 high of the prior cycle to the bear market low in 2022 at $15,500. This is an extension of that fib, and that is the 16.8% level. Above here, we've got the 1272 or 27.2% above that $69,000 all-time high. This is the zone that we have been playing in. We've deviated to the top side here. We have not deviated to the bottom side as of yet. Is that still a possibility? Well, as long as Bitcoin's in a downtrend, sure. But we still do have to take things on a confirmation basis, right? Below $96,000, we knew in lower term timeframes that the next big area of interest was going to be around the bottom side zone here, 92,000 to 88,700. We saw that all in one go in the Monday candle, and it closed back above $96,000, kind of where the criteria was to set this low. This low over here, we saw a little bit of a high set here in terms of a swing high, and then even slightly, it didn't quite confirm the close on that, but then turned right into a higher low right in this zone, right around $96,000. That's currently where we're seeing all these bids come in. That's also confluent with the lower second standard deviation away from the basis band here. So that's 2 standard deviations away from the basis, which is a 20 simple moving average. And I use Bollinger Bands, of course, for those that are new here, to gauge volatility, expansion, and contraction in conjunction with a handy indicator that now this is my personal indicator that you can get for free, and the link in the bit.ly link on X, and then the link in the video description down below on YouTube. But Caretaker was has famously created the BBWP, or Bollinger Band bit with percentile even, sorry. And he allowed me to pilfer some of his code for this and a few other things that are helpful to package into one indicator. This helps to kind of identify expansion in relation to the bands. So we can see that we've gone into an expansive phase to a compression, and we're getting slight bit of expansion down into support. If we were to see the lower second standard deviation get closed below, and then of course meet the criteria of breaking down from this $96,000 support, I would be looking somewhere around the low side swing here that we most recently got. Of course, lower third standard deviation around 93.5 is going to be fair game too. That's also a weekly close area. I haven't really talked about that, but that's a weekly close on the lows. I mean, we have looked at it, but I haven't specifically marked it, but it is a weekly level right there at the lower third. Anywhere below there, we're looking right back to run, 92, and this actual swing low or wick low is fair game into this zone of liquidity or support or demand or whatever you want to call it. This in this case has been a support zone. So to the top side here, what would set a daily low from here? Any closes back above 99,230, yesterday's high, which would also put it right around and possibly above the lower first standard deviation of the Bollinger Bands, would set a daily low. It would solidify this or codify this as the major swing low. Obviously, we're going to look at that and say, yes, this is the major swing low, right? But we, for a confirmation basis, it would set this swing low, and it would set a closing low on closes back above 99,230, would put it back above the lower first standard deviation with targets back up to 101 and slightly above $101,000 here at 101,175 to that basis band, somewhere around just shy of $102,000, right in this big area of overhead resistance where we saw all these closes in. And then of course the largest candle in this range, which is the big old doji here at $104,000 that front run right there at $92,000 front run this support. And that was actually the biggest candle still. I know this one was nasty on Monday. It liquidated a lot of open interest in the markets. So all those futures contracts got absolutely destroyed. Because they were all longing right in this area off of this higher low structure, which was, right around that 101 region, and trying to flip that back into support, or estimating that it would flip back into support. Many obviously did not take profits on this lower high because they just rebid right here in the zone and just got absolutely wiped. And that's kind of par for the course. That's what the market does. It'll eat you alive if you let it. And in this case, we were well aware of what was going on with the breakdown swing lower low, essentially equal low closes with a lower high in place. Once that solidified on Friday, we weren't even worried about that tariff news, but it did obviously have a big effect on the Friday into Saturday candle, and then Sunday came down to 96, and of course continued down into Monday before the nice big bounce after the traditional market players woke up and got off their butts and bid it all the way back to the upside here, right back into the zone of resistance. Anywhere above $104,000, pay attention to the upper first standard deviation around the lower high close open there, just shy of $105,000. And then obviously I would say even any lower term timeframes above there, we're probably looking at price running the 106 up here. Any higher term timeframes that close above the upper first that haven't done it yet, then I would start to look to that area at 106 to 108 as being the next big area. Any closes above the upper second standard deviation to the upside here, which is coming in at 107,500, we'll call it. It's close enough. That would still be expansion into the edge of the resistance over here. Anywhere above there, we need to see confirmation of daily closes above 109,360 here to start looking towards our 110 by the upper third. and possibly resolving with expansion to the upside in blue sky territory. So for the bears out there, I was pretty vocal about going short, at the resistance here after we had kind of this zone hold up, but we saw the structural change in terms of a lower low swing. I was very skeptical of retests of the high, and once we saw it come all the way back down to the bottom side of the zone, and get picked up, I'm not going to say what my positions were, but obviously I flipped long in these areas because it's a demand zone, right? But one of the things that if you are bearish on this, that you do have to understand, even below the lower second, this is expansion into support. So what you would need to see is expansion, not just into support, but through it. Yes, is there a trade there? Of course. But if you're looking longer term bearish, you need to understand that this support structure on the bottom side would have to break down, not just on a daily and like deviate and come back in. It would have to break down on like higher term time frames, and start to change structure, solidify that lower high close on the weekly and stuff like that. Right now that hasn't occurred, and the higher term time frames are incredibly bullish for Bitcoin. On like the monthly, the last higher low is still at $49,000. So all it would do is put in a high on the monthly. Could it be the macro high? Everybody would speculate, but until we see a structural change, it doesn't matter. It's still an uptrend, still a bull market in blue sky territory. It's still a bull run. So don't get too far ahead of yourself. I'm seeing a lot of people peacocking their bearish sentiment and I told you so's on the timeline, and like it's literally a consolidation. Chill out, like play the range. Don't get too bullish, too bearish. Just understand what it is, trade it effectively, and you'll come out the other side of this with a lot fatter bags in Bitcoin, hopefully. Let's go ahead and look at a few more things here. This is the RSI. We're not seeing anything major here. No bearish divergence between what is going on currently in this area. I'm sorry, bearish divergence. I meant bullish divergence. Sorry, because this is a downtrend now. Typically you'd want to see regular bullish divergence form, but because it is a range, it's in the strong half of the range. Until it breaks down, we're not really looking for too much to change in this structure, or it starts to set a low and take out the lower high, which is pretty far away at this point, but not unattainable. Bitcoin's literally putting on massive candles at will in this range and wiping out high leverage players in the game here. One of the things that I did want to flip over to is I did want to show this, as I haven't really shown it too much here. What are we at? 27.83 billion in open interest on Bitcoin. And this chart, if I refresh it, because I'm not logged in, this will kill it. One of the big things that I wanted to kind of point out in this video for the check-in is that when you look at where Bitcoin was in its first all-time high top area at $65,000, when we compare where open interest was at $65,000, it was at $20 billion in open interest, right? And we were even there again, right around that $20 billion open interest here, when Bitcoin was chopping around the all-time high $65,000 to $69,000 and making slightly new higher highs in that area. You'll notice something else right here in the open interest on the $69,000 all-time high. We actually saw significantly lower open interest. And in this case, what we have here, of course, is after the big leg up, we have we had a significant rise in open interest, and to the tune of $15 billion in open interest. So that's open interest. That's your leverage contracts. That's futures contracts in the market, right? And that's their value in the market for how much is in those futures contracts. And getting this washout was pretty. It's kind of pretty standard when you have price this high, and circulating supply, I'm going to show you here, is diving off the map. Well, that means you have less circulating supply on exchanges with much higher leverage ratios in terms of open interest, which means that all it takes is it takes a lot less spot selling to absolutely decimate the markets to the downside and even the upside. The open interest metric isn't measuring long versus short. In this case, the longs got absolutely wrecked. Looking at it live here, we can even go, this is Coinalyze, by the way. There's, I could use Crypto Quant where I have my account, but a lot of you may not have access to that kind of stuff. So if you go and you look at liquidations here, this is going to be the hourly, but we can flip over to the daily. And obviously you see, who got absolutely destroyed on open interest, but in terms of liquidations, we just had a lot of contract closes. So when you're looking at liquidations, it was actually the 5th of December that was the most nasty. Now, yes, in terms of leverage wipeout and liquidations, liquidation events in the market, it was a very significant one over the course of, over the course of like a week on this downturn. But, in terms of longs taking it on the chin there, they definitely took it on the chin much worse back here in December on the 5th there. So 1 month out from the election, right? So there is some things to put into perspective here. It's going to take a player a lot less coins to move the market in a very highly leveraged market for derivatives. And of course, that has a cascading effect across, the actual spot markets and everything else, right? So, but at the end of the day, something that at the end of the day, if we just go ahead and take a look at, we'll take all of the different indicators, all the fun support and resistance zones. We'll even kill my indicator here for just a moment. And when we look at this range, it's a volatile range, right? For all of the reasons just described. We're in a high volatility environment on higher term timeframes in blue skies, creating local support and resistance on the daily, right? So, but if we go ahead and just look at the closes on a line chart here, not much is happening. Not much is happening from like where we first saw, price kind of stop and pivot and then start to form this range. Not too much is happening. And in fact, if you're just going to snap a line down there, you're going to get your 98.5 level or so right around there, maybe even a little bit higher to 99,000. On some derivative exchanges, you're going to see it around 100,000 if they had a markup. I think we are running a bit of a spot premium right now, and keep a close eye on it because usually if there's a little bit of a spot premium, some of the derivatives markets might be betting in the wrong direction. So keep a close eye on spot price premium, and I believe there's plenty of good indicators out there you could just search for. I think maybe we can check it here on Coinalyze. I don't even remember because I don't use Coinalyze that much, to be quite honest. Yeah, I don't think they have a spot premium. I think they're just going to be maybe they just have all the different information. I don't think they have an aggregated spot premium. Maybe poke around some of these. There might be some other ones. CoinGlass is another free one. They might have the spot premium on there. It's a pretty common metric to measure. So just something to look at for confluence or maybe to counteract the bias, right? Not something to trade. Still a downtrend. We need to see a low set on a closing basis, solidify this this low down here, and then we need to see a trend break. Closes back above, the 102.6 here would look great, right? To go and test further up, 104, 105, and then possibly go for a trend break. Or we see it pop up to another lower high, come down, look for higher low, equal low structure, and then take out wherever that lower high is for a trend reversal setup. But as it stands right now, it's a downtrend until proven otherwise. And I generally would say above 96K, good. It's got a good shot for trying to set a low, probably test up further, $100,000 to $102,000 fair game, and above. But below 96, we're looking at running the bottom side of the range again, right? And then danger on any closes, now below this most recent low, then it's getting into the thick of it in terms of the last line of supports over there locally. I'll leave you with this. If you do want to just kind of look at where the weekly is in very simple terms, the closing low there at 93.5. We just spoke about that earlier with where the lower third is on the daily for expansion to the downside. And then understand that we have a lower high close here with a higher high swing. So this entire zone, if you just wanted to break it up into support and resistance in this manner, you certainly could. if you want to keep an eye on things from the weekly perspective as it relates to those lower term time frames and kind of, draw out your own ranges. It's going to be whatever you decide. You set the conditions. I will tell you that on the weekly, bulls want to get back above that upper first standard deviation, which is right there at the close open at 102. Start pushing back into that, and at least closing there would give the bulls the opportunity for that 115 to 116 by the upper second. Otherwise, this is going to be a choppy ride as we move back in from expansion up to compression. But because we are above the basis band, and if we can get above the upper first there for the bulls, then it makes available these, even in a compressive environment, these higher high areas. Otherwise, we got the basis band coming up to the bottom side of the range currently at 87,400. So when looking at the weekly, actually, we should just mark this out. So sorry, I was going to wrap it up, but then I got interested again in what this weekly is presenting here. If we look at where the basis band is, or the 20 simple, look at that confluence right there. Basis band is right at the close open, which on that other chart is, the area, the last line between the close open here, as I'd mentioned, the upper $80,000 region at 87.3 to the swing low there on the daily at 85 is the literal line in the sand. Deviations are fine if it did get down there, but we have a lot of confluence there for that area if Bitcoin is going to remain below the basis band throughout this week, or the upper first throughout this week. Sorry, I'm a little tired. My bad. Below the upper first this week and can't trade above. The basis band is, and the supports down here are the logical areas to look. Otherwise, it's just going to trap sideways and consolidate, which is fine with me. That's going to be it for today. I will catch up with you again on Friday. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe as I clean up my chart here. And I'll talk to you on Friday. You can catch me on a lot of different shows. So just go ahead and follow me on X. If you're watching this on YouTube, the videos do go up a little bit later, but you can always subscribe here too. So thank you. Take care. Have a good one. Landy out.